Today is Wednesday, January 7th, and here's your bi-weekly update on the economic, mortgage, and housing data that matters most for buyers, sellers, and realtors right now. This week's report focuses on labor and services ahead of the Federal Reserve meeting later this month. Mortgage rates are holding around 6.25%. We saw mortgage applications slow while refinances picked up, which tells us that buyers are still active. They're just being more strategic. On the labor side, the ADP jobs report came in below expectations, showing hiring is cooling while the services sector remained in expansion territory. Services continue to drive most of the U.S. economy, so that's still supportive for housing demand. The Federal Reserve meets in about 20 days on January 28th, and the market currently expects no change in rates with an 88.9% probability of a pause. The biggest market movers still ahead this week are initial jobless claims on Thursday, and then on Friday we'll get average hourly earnings, non-farm payrolls for December, and the unemployment rate. These data points influence inflation, and inflation influences the Fed, which ultimately influences mortgage rates. Look to next week on Tuesday, and we'll get the December CPI inflation report along with new home sales. On Wednesday, we'll see producer prices, retail sales, existing home sales, and the Atlanta Fed GDP Now update. Thursday brings jobless claims again, and on Friday, we'll get the Philadelphia Fed Manufacturing Index. Moving forward, I'll be sharing these updates every 2 weeks so you can stay informed without getting buried in data. And if you're considering buying, selling, or refinancing, or investing this quarter, send me a message and I'll walk you through what these numbers mean for your situation.